I thank the chairwoman for yielding, and I thank all of our witnesses for appearing today to discuss the reauthorization of the National Flood Insurance Program, which, as we all know, and has been said multiple times, is set to expire yet again in May. You know, I spoke on the House floor in November expressing my profound dismay with the eighth short-term extension vote since fiscal year 17, with the NFIP being $20.5 billion in debt. We must reform the program to keep it solvent, to provide coverage for those who truly need it, and to protect the taxpayers from additional and future bailouts. It is estimated that only 3.5 to 4.5% of current flood insurance policies are covered by the private sector. Mr. O'Mara, do you believe that there should be greater private market participation in those policies that cover threats from floods?
Absolutely. Absolutely, and we see the opportunity of the federal program focus more on vulnerable communities and the private market take care of more folks that can afford it.
The flood insurance market is dominated by NFIP, Mr. O'Mara. Do consumers benefit from this near monopoly?
I think more data and more competition is good, and I think the concerns that have been raised in the past have been discounted by the real-life experiences of states like Florida that have shown that you can actually have competitive marketplaces.
And how does it work in Florida? How is it working in Arkansas and places like this, in the private market?
So the places that it's working best are places where the policies are at a good level. I mean, there's kind of good standards around them, and then making sure that banks and others are kind of accepting those as fully viable alternatives to the federal program.
Mr. Lehman, when the NFIP was created in 1968, I think I was 6, the belief was that the private insurance market lacked the data and ability to assess flood losses. We've had a little conversation about data here, which has been very important, especially that relating to mapping. Tell me, what has changed in terms of data, technology, and the market's ability to assess risk since 1968?
There's a few things that have changed, among other things. The insurance industry used to be much more local. It is a global industry now. Reinsurers in particular operate internationally, take large risks from different parts of the world, balance them against each other, and that's how they're able to cover very large events. The depth of the global reinsurance market, the ability of catastrophe modeling, the emergence of the catastrophe modeling industry, and just general changes in how insurance is underwritten has made it possible for a private market to emerge. It is not prepared to take over for the NFIP. The NFIP remains the primary source. But it is emerging, and it will continue to grow. What we need is both. We have 85% of the country without any flood insurance, and there is a significant need for the marketing juggernaut of the insurance industry to start having an incentive to sell this coverage to people who don't currently have it.
And in that same keeping, which barriers within NFIP prevent private insurers from entering the market? And how do some of these legislative drafts today help solve some of those problems?
It seems like a good number of the issues with the banking requirements may be resolved by the rule that is currently open from the FDIC and the other banking regulators. I understand that the FHA remains an open question, and I know some of the other panelists have discussed that. The biggest disincentive right now to the program is if you are going to move from the flood insurance program to a private policy and then want to move back into the flood insurance program later, you're not currently considered to have continuous coverage. And so if you had a subsidized or grandfathered policy, you would be stuck with the full risk rate. I want policies to generally move towards full risk rates, but that can be punitive in the short term. In the short term.
In the long term, though, we could see real movement, I think, into the private sector. And some of the tools that we talked about, like reinsurance and additional data dealing with mapping and other things, these fact checkers ought to be able to allow underwriters to move this into the private sector more. Would you agree?
I agree.
Mr. Mara?
Yes.
Ms. Guzman?
Absolutely. And may I add that on that lapse of 40,000 people that were purchasing, a lot of those were FHA loans. And they were not given an option to go and seek private mortgage insurance so that they could close that transaction.
I appreciate it. Thank you. I thank the chair.